Hi, Clint Coons here with Anderson Business Advisors, and in this video, we're going to discuss Airbnb investing. All right, let's get started. Okay, when it comes to investing in Airbnb, there's a lot of confusion out there because everyone talks about using limited liability companies when it comes to owning real estate. And if you watch some of my other videos on LLCs, and believe me, there's a lot of them out there, you'll notice that I talk about the importance of having a limited liability company from an asset protection perspective. And LLCs are the workhorse for real estate investors. However, when it comes to structuring your business, especially your Airbnb, we have to think outside of the box. We have to get a little more creative. Remember, this is not a one-size-fits-all approach when it comes to investing. So many investors make that common mistake. They think all they need to do is create that LLC and I'm golden. Well, that means you're only focusing on the asset protection leg of your investing plan. When it comes to Airbnb investing, you also need to pay attention to taxation because can come up and really hurt you and really take away from the amount of money you're generating from your Airbnb income if you're not conscious of how taxes will affect the income you're generating from this tremendous opportunity. So, what am I talking about? Well, most people, when they look at investing in Airbnb, what they're going to do is go out and create a limited liability company. And that's right, you want to do that. So you got an Airbnb property, you will set up an LLC right here. So here's my LLC, and I will place my property into this limited liability company. Now, the mistake you're going to make is that if you intend to engage in Airbnb out of this LLC, you're going to run into some serious problems come tax time because Uncle Sam's going to want a bigger cut of your income. Because when you're engaging in Airbnb with an LLC, let's say you're down here, and I assume you've set this up as a disregarded entity or a partnership, because you'd never want to have a corporation owning this because there's negative tax consequences by having this in a C Corp, rental property, because when you later sell it, you're going to miss out on long-term capital gain. So let's assume it's set up as a partnership or disregarded entity, which means everything flows down to you. Now, as a result of that structure, then the activity that takes place up here in the LLC is attributed to you as if you did it in your own name. So for example, if we didn't have real estate inside of this LLC, let's assume that I was running an asphalt business. Well, that's an active business, right? So if you have an LLC set up that's a disregarded entity or a partnership of which you're involved with, then the income or the activity that takes place up here is attributed to you as an individual as if you were doing it in your own name. So essentially, the IRS looks at you as a sole proprietor. So if the LLC is engaged in an active business and it distributes to you money from that business, then that money is considered to be active income to you, which means it's, subject to your ordinary income tax rate, plus you have to pay employment taxes on it, 15.3% on top of the income you're already paying ordinary income tax on. So, how does this apply to Airbnb? Well, Airbnb or short-term rentals is considered an active trader business. So income that comes from this activity is going to be subject to employment taxes when you have it set up in this flow-through manner. Now, I've met numerous Airbnb investors that were shocked to discover this. I mean, they've been making really good money, $80,000, $100,000, $150,000 a year, and not paying employment taxes on that income. They thought it was all just ordinary income from their investing. They were treating it like their other rentals. Well, that's not the case. And I said, it's just only a matter of time until you get audited and the IRS will recharacterize that income and tag you with that additional 15.3%. So what do we need to do then? Set up the structure like this. So you obviously want to protect your property. That's very important. So we will create an LLC. Typically, I'll have this LLC set up as a partnership if there's more than one individual, or it'll be a disregarded LLC. All right. Now, remember, I just told you something about that. It's not going to apply in this context. So you don't have to worry about the employment taxes because we're going to do some magic here with the way we set this up. So we're going to own the property in the limited liability company for asset protection. That's why we're doing that. Now, we're going to create a second entity up here. Here I'm going to create a C corporation up here. And that company I will own, and I'll be an officer of that company, so I'll run it, and I'm the shareholder down here, so I'm going to run that company. Now, the C corporation is going to enter into a master lease agreement with this LLC. Another way I could say that is that your LLC is going to lease property to your corporation. And the property it's going to lease is this one right here. So we're going to lease it. We're going to lease that property up to that C corporation. So let's assume that your Airbnb property, you're calculating it's going to generate $7,000 a month in Airbnb short-term rental income. So if I know that I'm going to generate $7K a month, if I ran it all through this LLC, just take $7K times 15%, and that's how much additional tax you'd have to pay on that money you're generating. So that would be about $1,000 in additional income taxes I'd be paying if I ran it down here. I don't want to do that. I want to put some tax savings into my pocket. I don't want to be paying an extra $1,000 a month. So what I'm going to do is I'm going to enter into this lease agreement where my LLC agrees to lease the property to the corp for $5,000 a month. So I'm going to lease it at $5K, and then the corporation is going to turn around and release it back out on a short-term basis. So all the people that come there are going to be paying the corporation. So the corporation makes $7,000 a month. It turns around and has a $5,000 a month payment back to the LLC because it's leasing the property to the LLC. Another way to say it is that I lease it to here. This is going to lease it out over here to the short-term rental people. So it's an expense. So $5K comes back to here. That $5K that comes back to here, since I've leased it to the corporation, that's not subject to employment taxes because my LLC is not engaging in short-term rental. What is it doing? It's in a long-term lease arrangement. We call this a master lease. It's a special lease we put together. It's in a special lease arrangement on a long-term basis with that corporation. So that turns that ordinary short-term rental income, active business income, into ordinary income, ordinary rental income, passive income. So now we've got $5K here. At 15%, what you're going to do is you're going to save $750 a month in taxes by using this strategy. Just calculate that out. Over an entire year, you're going to be saving close to $9,000 in taxes by this one simple strategy, by entering into a master lease arrangement with your corporation. Your corporation is going to make $2,000 up here. What are you going to do with that? You're going to spend it. You're going to find ways to pull that money out. My partner, Toby Mathis, he teaches a number of great courses on taxation for rental real estate investors. He also has a class every other Tuesday called Tax Tuesday. If you're not signed up for that, I highly encourage you to go to our website, andersonadvisors.com, look for Tax Tuesday and get registered for Tax Tuesday. You should be on that call because this is the type of stuff we're going to be covering, how you can save on taxes for your rental real estate. But hey, that's it right there. You want to protect your Airbnb to lower your taxes and protect those assets, set up a master lease arrangement. If you don't own the property, no problem. Still use the corporation. Here's a property down here somebody else owns. Enter into a lease arrangement with the third party for their property, sublease it back out. You're in business, you're making money, and you're not overpaying in your taxes. My name's Clint Coons with Anderson Business Advisors, and in this segment, we covered Airbnb investing.